those psychological levels, they come back into play. When Bitcoin hits 60K, it's going to drop. There's literally no doubt about it. When Bitcoin hits 60K, boom, it'll drop. On the smaller time frames, you'll be able to take a trade there. You short Bitcoin at 60K, easy money.
Welcome back, everyone, to I'm Sitting Down with Nick Bencino. We had a few interviews before. It's someone that I really respect, someone who trades full-time before Forex, now moving to cryptos more. So Nick, how's it going today?
Yeah, I'm great. Thanks. How about you?
Very good, very good. Good to have you back, and good to talk about kind of what you've been working on recently and things that you're kind of getting more into, which is crypto. But tell me about kind of what's been happening since we last spoke a few years ago.
Yeah, well, a lot has changed, especially this year. I have two really good friends who I'd say, well, one of them is a good trader and the other one is not really a trader. They started getting into crypto and they're my best friends. So they eventually just talked me into it. And I was really, really kind of against it at first because I have that kind of the mindset a lot of people I speak to now have. I had a similar mindset where I'm like, it's a fake market. It's not going to make any money. It's all just gambling. But they sucked me into it, and I'm going to be forever grateful to them for that one because, it's just been a life-changing experience. I've just dove straight into crypto. The risk is lower and the returns are higher than Forex. It's a much more exciting market because, let's face it, Forex has been boring for the past year. The low volatility is just not great. Basically, the last year of my life, or sorry, not even the last year, the last 11 months of my life have been almost full on crypto. It's been pretty crazy.
What made you decide to do the jump from Forex to cryptos? Because obviously you could still trade both and still be in both market, but was it too overwhelming to trade two things, or did you feel like Forex wasn't worth it anymore?
Well, the original plan, I do still trade Forex a little bit. The original plan was like, I'll dedicate, let's say 20% of my time to crypto. And then 20% became 30, became 40, became 50. And now it's more like I dedicate 20% of my time to Forex. And it's really just the returns. I mean, the returns are so absurd in crypto that it just doesn't really make sense to dedicate most of my time to Forex. If someone said to me last year or the year before, maybe, no, even last year, if someone said to me, can I double my money in Forex in a year? I'd be like, probably not, especially as a new trader, unrealistic. If someone says to me, can I double my money in crypto? I'd be like, yeah, probably by next month. That's a bit of an exaggeration. I'm exaggerating a lot, actually. Probably not by next month. You have to take some risks for that, to be fair. But doubling your money in crypto is relatively easy compared to Forex, and it's less risk because you're not using leverage, and leverage is where most of the risk is in any trading. So leverage is where most of the risk comes in Forex trading, and in crypto you can make the same returns without leverage. So if you think about it, like Bitcoin is one that everyone obviously knows. So let's say you buy one Bitcoin today. I know that's a lot of money, but just as an example. Now, Bitcoin needs to drop down 100% for you to lose all your money from that point, which is an unlikely scenario. Sure, it could drop 50%, it could drop 70%. It's unlikely to drop 100% unless there's like a ban by the government or something like that. So because you're not using leverage, it will have to drop down to zero for you to lose all your money. Now, it could drop down 99% where you've effectively lost all your money. I mean, it's almost everything. So, may as well call it everything. But with leverage, you can lose all your money, all the money you invested in that trade. You could lose that just in an instant. So the downside risk of crypto is a lot lower. Now, Bitcoin's not a great example because Bitcoin can't do like a 2 times or a 3 times very easily from here because it's 60,000 right now. So to do 2 times, it has to be 120,000, 180,000 to do it 3 times. But when you go to some of the lower cap cryptos, like some of the smaller ones, they can easily do 2 or 3 or 4 times in a day. Some of them can do, I didn't mean to say in a day. I meant to say in a week. Some of them can do it in a day, but realistically, 2 or 3 or 4 times in a week is something that's achievable on smaller cryptos. So the downside risk is relatively low, whereas the upside gain is really high. And yeah, that's what really attracted me to crypto. Without leverage, I have less risk, but my returns are the same as, if not better, than your average Forex trade. So no brainer.
Interesting. How do you pick, or how do you find which cryptos you want to trade, which coins you want to trade? Because in Forex, you have like, let's say 60 pairs or so, maybe like 20, 25 that are tradable. How do you pick the coins you want to focus on? Because there's a lot of them.
Yeah, that's both kind of like a blessing and a curse in crypto. A lot of people will look at it and say, well, there's 1,000 pairs. Where do I start? But then a lot will look at it and say, there's 1,000 pairs. I have so much opportunity here. So it really depends the type of mindset you have going in. I'm definitely one of those, there's a lot of pairs. Where do I start type mindset. So what I try to focus on is the sectors of crypto that I think have the most opportunity for growth. Right now, I believe that's the gaming sector. Gaming, me and my friends say this all the time, gaming is a huge industry. There's, according to statistics, 3.2 billion gamers in the world. I'm not sure if I believe that statistic because it sounds a bit absurd, but let's just pretend that 50% of that is right. So there's 1.8 billion gamers in the world, or 1.6 billion gamers in the world. Gaming is kind of merging with crypto. And when you think about it, gaming has always had an element of a cryptocurrency in it. It wasn't a blockchain-based cryptocurrency, but a lot of games like World of Warcraft, MMOs in particular, they have their own currency within the game itself. Now, there's millions of players of World of Warcraft. There's billions of gamers in general in the world. When these two industries start to merge, when you start to get games moving into crypto, which is happening at an a crazy pace right now, you can imagine billions of people moving into crypto, and they don't even really have to think about crypto. They don't even have to know they're investing in crypto because all they care about is playing this game. But the value of that crypto, that's going to go through the roof because you have so many people buying it in order to play that game. So you could look at a crypto like Axie Infinity, which has gone up, I think 2,000 times at this point from where I wasn't in that one from the start, unfortunately. But from the right at the start, it's gone up like 2,000 times or something. So as we move more, gaming is one of the sectors I'm focusing on right now because I think that it's going to explode. There's already a lot of huge cryptos in gaming, and I think it's the first sector that's going to completely decouple from Bitcoin, which right now the problem with getting into crypto is if Bitcoin goes down, the music stops. It's over. You can still trade crypto, but it's just not going to be you're not going to be buying anything. I'll tell you that much. You're going to be taking a lot of shorts because if Bitcoin drops, boom, everything goes down. But gaming, I think, is the first one that has an opportunity to decouple from Bitcoin that can go up in a market where Bitcoin's going down because gamers don't care about Bitcoin. They just care about playing their game. And I am a gamer, so I know the mentality there. They care about playing their game and buying their crypto to play the game. And sorry, I know I'm talking a lot, but one more thing. Gaming cryptos, it's a new thing because it's called play to earn. So instead of throwing money into a bottomless pit, you're actually playing the game and earning crypto from playing it. So you can make money playing the game. So this opens up opportunities to a lot of people in third world countries who do not have jobs to work from their computer by playing the game. And that's really huge right now. So gaming is just a huge industry that I'm investing in right now for crypto.
Interesting. And I'll be honest, I wasn't even aware of these crypto for gaming. So it's really a good thing to talk about. Now, what kind of trading do you focus on when you trade crypto? Is it like a buy and hold, or in and out fast, or is it still swing trading that you were doing before, or more like a scalping perspective?
So basically, right now I'm buying projects that I think have opportunity, have a very good chance at going up 100 times in the next year or two, right? So my goal is buy now. I want it to go up 10, 20, hopefully 100 times within the next 2 years. So I'm looking for projects that really have a good team and a good community and a good idea. So I'm looking to buy and hold for a long time. Now, in between that 1 year period, I am selling some of this crypto and buying it back on the dips, and I do that by looking at charts, which is basically what I've done for most of my life. I look at the charts. When I see something peaking, I'll sell it, and when it dips back down, I'll buy it back, and I'll build up my position like that. So, like, let's say I have 1,000 of this crypto, just as an example. It goes up, I'll sell. When it goes back down, I'll buy back the same amount I sold, but now I have 1,100 of that crypto, and I'll just build up the position from there. And eventually this crypto is going to be worth 100 times what it is today. Well, hopefully. Some of them won't, obviously, but yeah, I've got a long-term hold mindset, but in between that long-term hold, I am using my skills as my trading skills to build up that crypto and make more of it.
Interesting. So my first thought was, yeah, but how do you deal with like a project goes up like 50%, but then goes back down to like zero after, because you're gonna lose all your gains. And I think you've answered it the way you said, you kind of scale out of it, then go back in after again. So
yeah, I scale out. I never put back. So my first goal is to take out what I've put in, right? So if I put in like $5,000 on a crypto, I want to take $5,000 back out and invest that 5,000 in another crypto. So as it goes up, I'm taking money out. My rule of thumb is if it's up 100% or if it's doubled, I'm going to take 50% of what I put in out. If I put in 5K, it goes up to 10K. I'll take 2,500 out, because 5K, that's half of the 5K I put in. And then depending on how the crypto is moving, I'll try and draw more out until I've hit my goal of drawing 5,000 out. And then I'm just playing with house money. That's what I like to call it. All that's left in that crypto is profit. If it goes to zero, it would suck, but I don't really care that much because I've taken my original investment out. So I'm good. And I'm on to the next one, and I'm holding this one, and I still play with it. I'll still draw some out, buy some back in. I'll try to build up that position, but I'm out.
how do you decide how much capital you allocate to one specific coin or crypto?
That's a good question. There's a lot of factors. It all comes down to heavily researching every crypto you buy. And there's a fair bit of work in the research. First, you have to look at the team. Is it a good team? Are they anonymous? There's a lot of anonymous teams in crypto. I don't like anonymous teams because you don't know who these people are and if they're just going to run away with the money. If it's from people who have been in the industry for a long time, who have several projects under their belt, then it's almost a no-brainer to get into the coin, because they have a track record of being honest people. So that's one of the main factors I'll look at the team, but I'll also look at how much of the coin there is. One important factor that I've just started looking at is looking at whether the coin how much of the coin has been bought at pre-sale prices. Now, pre-sale prices are what a crypto will do, or what a team will do to make money before they launch. They'll sell their coin at pre-sale prices to private investors for a very cheap price. Now, if private investors hold 20%, let's say as an example, of that crypto at pre-sale prices, so they've got in really cheap, and that crypto is up like 100 times for them because they got in so cheap, they're likely, when their crypto gets released to them, they're likely to dump it all. So if I built up a big position and these people are up 100 times and they start selling, that crypto is going to dump. That's another factor I look at. So I want to make sure that the private investors, number one, that they don't have a lot of this crypto. Maybe like if they've been given 10%, if they've been sold 10%, that's pretty cool. I want to know that the private investors are locked in for a long period of time. Maybe that they get, if they bought 1,000 of the crypto, just as an example, they get 10% of that per month for the next 10 months, right? So that means they can only ever sell 10% of their holdings at one time because it's not been unlocked for them. So that's another factor. And that's a position I'm in right now. I'm a private investor in a crypto where I'm getting 20% per month for the next 5 months. So if I got 100% and that crypto right now is up 500 times as of today, but it was up 700 times a few days ago. So think about like the money I've put in, it's 700 times more than right now. Sorry, it's 500 times more than it was when I bought it. If I get 100% of that today, I'm going to sell that because I've just made 500 times return. So in order to avoid people like me just dumping everything and crashing the price of that crypto, there's periods, it's called vesting, not investing, vesting. It's a vesting period and it unlocks at 20%. I got 20% of mine last night. Obviously the price crashed when I got it because everyone else like me, who's a private investor, got theirs. The price crashed. And, people who bought the top are now like sitting at minus 50%. They shouldn't have bought the top, but a lot of people don't know any better because they don't look at these things. They don't look at what are the private investors doing and are they going to dump as soon as this token comes out? So that will influence how much I put on a crypto. If it's a crypto that has like a big allocation given to private investors and I know that they're going to dump prices, I won't put as much in it. If it's a crypto that private investors have almost none of it, and there's a good vesting period where they're locked in for a long time, then I'll go heavier on the crypto. And so I look at the team, I look at private investors, I look at the utility of the project, I look at everything, and then I'll decide how much to put in.
So it seems like there's a lot more sort of fundamental research to do in cryptos. Go research the coin, how it is, compared to what you were doing in Forex. Do you feel like that's necessary for crypto, or do you feel like you could still kind of trade crypto without doing that kind of research before?
It depends what kind of approach you have. Now, I'm also doing more and more so, I'm doing just chart trading, just short-term chart trading. And I try to focus on some of the bigger cryptos with that. So I'll look at Bitcoin, Ethereum, Cardano, although Cardano is really boring, Solana, stuff like that. I'll just trade the charts. Now, that's another cool thing about crypto that maybe you said you've spoken to crypto people before, so maybe someone's said this, but let's go back 20 years in Forex when I first started trading. 20 years ago in Forex, it was a lot easier. The psychological levels were a big thing. When something hit a flat psychological level, like let's say, I don't know, GBP USD hit $2. That $2 level would be such a strong level that it would react at that. But not even just $2, like any level, really, any psychological level, price would react strongly from it, just because it's a big rounded number. These days, price doesn't react as strongly to psychological levels, which makes it a lot harder for traders to do their job. But in crypto, it just reacts to psychological levels. Now, why doesn't it react to psychological levels anymore in Forex? Because Forex more and more so is being controlled by bots. The banks, the hedge funds, they're all running algos, and those algos are trading, and algos don't really care about psychological levels. To an algorithm, to a bot, $2 doesn't mean anything. It's just a number. So those psychological levels don't work as well in Forex anymore. But because crypto is driven by people still, for the most part, it's mostly driven by people. The institutions aren't heavily invested. And the institutions are more invested in Bitcoin than anything else, Bitcoin and Ethereum. But even at that, even there, they don't really have algos running and stuff like that. They're just doing long-term hold type trading on Bitcoin. So because it's driven by people, those psychological levels, they come back into play. When Bitcoin hits 60K, it's going to drop. There's literally no doubt about it. When Bitcoin hits 60K, boom, it'll drop. On the smaller time frames, you'll be able to take a trade there. You short Bitcoin at 60K, easy money. When Bitcoin hits any resistance or support level you have drawn, as long as it's a good resistance or support level, it's going to hit that support level and go up. Will it go up for the next few days? Not necessarily, but will it go up like on the 15-minute chart, for example? Yes, it almost always. It might have a wick below, but it will go up. And it's child's play. For people like us who have been looking at charts for decades, crypto trading is like child's play. The way I like to think about it is everything you've taught yourself to be successful in an increasingly complex Forex market, an increasingly difficult to trade Forex market, scale that all back, go back to absolute basics. I joke with my friends that the best way to be successful in crypto is to be dumb, because the dumber and more basic your thinking is, the easier it is to make money. Bitcoin at 60K, I sell. That's like your thought process. Bitcoin 60K, sell. Bitcoin 50K, buy. Like, there's no thinking really involved there. It's just anyone can do it in crypto. It's just easy. So I do trade charts. I have a long-term portfolio and just a portfolio where I'll mess about with and I'll trade the charts. But more and more so, I'm trading charts just because it's fun, really. And research is boring. I have a team now that does a lot of my research for me, and I'm building that team with more and more people who do my research for me, so I can get back to the charts, which, is where I've always been and where I like being.
Do you have any preference in terms of what kind of charts you trade? Like, what kind of time frame? Is it more like you mentioned kind of day trading, but is it more like a higher time frame or still a lower time frame?
With crypto, I'm definitely focusing on the lower time frames because it's so easy. Can I share a chart? All right, cool. So, like I was saying, crypto is really simple and basic and straightforward. This is the 60K level. So that's a nice round flat number. At the 60K level, what happened yesterday? Bitcoin dropped down to it. If you had a buy order at 60K, look what would have happened. This was a quick drop, hit that buy order at 60K, turned around and went up. That's easy money. 60K, again, if you had a buy order here, it would have went up. It would have dropped back down, but it would have went up again, so on and so forth. Obviously, sometimes it'll break below. I mean, your support isn't always going to hold perfect. Like in this scenario here, it broke below. In that scenario there, it broke below. But then you come back to here, it went up. So if you're trading these on the lower timeframes, like the 15 minutes, it's so easy to make profit from these levels. You're just trading those round numbers. 60,000 you buy, goes up. You don't even need leverage for this. 60,000, because you don't need leverage because crypto moves so much. But if you wanted to put leverage in here, no problem. You have the opportunity to put leverage in there, but you don't really need it. That's pretty much crypto for you. It's just these basic levels. They work so well. I'll show you another one.
How would you put your stop loss if you trade something like this? So, because you could buy at 60K, but then what if price goes back against you? You can't really put a stop loss or use like an ATR or something.
No, you can. You can put a stop loss. It depends what you're trading with, but you can use stop losses.
But where would you put this in the chart? If you, let's say, decide to buy at 60K, what would you put the stop loss?
So for me, the way I'm doing crypto right now is I'm looking to build up positions in key cryptos. So this is just to explain. I have like a whole portfolio that's dedicated to building up positions in key cryptos, and then a portfolio that's dedicated to short-term trading, like chart trading. So it gets really confusing for people when I say I'm buying Bitcoin, and then they'll be like, "Where's your stop loss?" And I'm like, "Well, I don't have a stop loss because I'm building up a position." But then the next day I'll be like, "I'm buying Bitcoin, my stop loss goes here." So I just want to get that out of the way first, because the key here is when I say I'm buying Bitcoin to build it up long term, that's one portfolio. That's my long-term holds, my investment portfolio. When I say I'm buying Bitcoin, I'm putting a stop loss in. That's my short-term portfolio. That's my like trading portfolio. So it's two completely different things. Yeah, I wanted to get that out of the way before I talk about stop losses, because I know people are going to be like, "But you said you don't use a stop loss." But two different portfolios, right? So for trading, I usually set my buy order just above the 60K level. So yesterday, buy order was set just above the 60K level by a few $100s, because a lot of times it won't quite reach the even flat number. So I'll put my stop loss just above 60K. My target usually is going to go, and this is how I do it in Forex. I decide on where my target's going to be first. My target's usually the next resistance area. So I set my target at the next resistance area. And then my stop loss just becomes right here. So basically, how I do my stop losses is I like to put it below a psychological level. 5,900 is a psychological level. It's a nice flat number. Very simple stuff in crypto. So in crypto, people, like I said, look at psychological levels. So I like to stick my stop loss below a psychological level. Would I stick it at 59,300? Wait, let me get my drawing tools up real quick. So would I place my stop loss here at 59,300, which is 1,000 below where my entry is? No, because if it dips below 60K, which is totally possible, where's it likely to go down to? It's likely to go down to 59K before bouncing away, because that's how crypto works. Flat, even numbers. Psychological levels are so important. So I want to place my stop loss below that psychological level. So I'm going to pull my stop loss down at 5,900, below 5,900, a few $100s below it. And as long as I maintain a good risk to reward ratio, which for me is above 1.5R, which this one is 2.2R, that's fine. That's it. That's the trade. I know it seems simple, but that is the key to crypto. Keep it as simple as possible. There's like, the less you think, the more profitable crypto gets. Really, it's that's how crypto works, because you're just dealing with thousands and thousands of other people, not bots, that are doing the exact same thing. They're looking at their charts and they're looking at it, generally speaking, in the most simplistic way possible. They're looking at psychological levels. And as long as you make use of those psychological levels, it's easy returns.
So you be targeting exactly the next zone, the next round number, or you try to get out of it before that?
I have support resistance areas in place on my crypto charts. So the next round number is definitely going to be a bit of a barrier for it. You'll find that all the round numbers act as a bit of a barrier, but just like in Forex, there are major barriers and there are minor barriers. So each psychological level I would consider a minor barrier. It's going to hinder Bitcoin's move up, but it might not like stop it in its tracks. But right now, a major barrier for Bitcoin is right up here at the 6,400 level. So I'll move this up just a tad. 6,400 level is a major barrier for Bitcoin right now. And once it gets that 6,400 level, it usually turns around until it breaks out of this, essentially this sort of range almost that it's in. Once it gets to 6,400, it turns around. So I like to place my shorts before the 6,400 level, because like I was saying with my long, I don't like to place it right down at the 60. I like to place it here. So not right down at the 60, just a few hundred before. So the same with the shorts, I like to place it a few hundred before. Now, in this case, it did go up a fair bit, but yeah, it's better to place it before the psychological level, which is the 6,400, place it at like the 63,300 or 63,800 or the 63,700 or the 63,600. You short there, then you target back down here at the 60. So I'm doing it between key support resistance levels, which is right now for me on Bitcoin, 60,000 to 64,000. And of course, the all-time high, which is the 67,000 and the 58,000 down here. And this one, right now, these are the levels I'm playing on Bitcoin. These 4 levels here. And for my stop losses, I'll use the minor barriers just to place my stop loss beyond those minor barriers. So that's why I place my stop loss beyond the 5,900. 5,900 is not a major barrier for Bitcoin. It doesn't generally hold price back, but it's a minor barrier. It's and it's safer to place your stop loss behind as many barriers as possible. So even though it's a minor barrier, I'd rather have my stop loss behind that minor barrier than have it just before it, right? Because worst case scenario, Bitcoin slips below 60,000 when I've longed at around 60,000. Worst case scenario, it slips below it, and then it might hit this minor barrier and go back up. If I had my stop loss here, it's more likely that that stop loss will be hit. If I had it beyond that minor barrier, it's less likely it'll be hit because that minor barrier can sometimes stop price. Does that make sense?
Yeah, it totally makes sense. Do you have any issues with going short on this, or would you go short the same way you go long, knowing that cryptos tend to trend really, really well?
Yeah. On the short time frames, on like the 1 hour, the 30-minute stuff like that, 15-minute, I'm happy to short. I didn't short this yesterday. I would have shorted it yesterday, but I just didn't. I'm not always trading, so I didn't short this yesterday. I did. Wait, was that even yesterday? It's hard to keep track of the days now. No, that was 2 days ago. So I didn't short that 2 days ago, but I did long this here, and I honestly don't trade Bitcoin that much. I think I longed this here. I'm trying to remember the last short I took. I don't think I've shorted Bitcoin in a while, to be completely honest. I've mostly been just buying Bitcoin and selling off. I definitely didn't take that short, and I definitely didn't take that short. So I haven't shorted Bitcoin in a while. But you got stuff like Ethereum making all-time highs. This is another example of some easy trading. Ethereum makes an all-time high. It hits 45. It breaks 4,500, which is a nice round number for Ethereum. So once it breaks 4,500, what does it do? Comes down, bounces from 4,500, goes back up. Right now, it's at 4,500. So it could bounce from here and go back up. I might actually take a long here after we're done on Ethereum because I think long-term Ethereum is probably going to go up. I think that at the start of the day, things tend to look pretty bearish, but as the day goes on, as the US market opens, things sometimes or a lot of the times flip around. So this would be an ideal opportunity right now to buy some Ethereum, go long. Stop loss probably be down here, to be honest. I'd want to put it below that last dip. So I'd stick my stop loss. Wait, let me draw this in. I haven't bought yet. Ideally, I'd want to buy a bit further up there. But it's too late now. So let's say once we finish up here, I'll buy some Ethereum, stick my stop loss down here, and stick my target there. Boom, done. That's a simple trade in crypto. Very easy stuff. I've got a 1 to 2 risk reward ratio. So if it goes up here, I cash out and that's it. And it'll probably bounce from there because that's the current all-time high in Ethereum. So it's more likely than not going to bounce from that current all-time high.
One thing I'm wondering regarding trading the 1 hour chart for me is the toughest one because you got to be there. Like it's not long enough and not short enough, so you got to be there like every hour to check the chart or so. How do you manage that?
Well, see, this is why, like I was saying that I didn't catch that short on there on Bitcoin because I just wasn't around at the time, and Uh, that's just the reality of trading. Sometimes you're not going to be there. Uh, so that's why I have these two portfolios. So I have my long-term investment portfolio where I'm just buying Bitcoin, I'm buying Ethereum, and I'm buying a lot of the other smaller cryptos we talked about. So though that would be my long-term portfolio. Uh, and that's honestly where I'm making most of my returns right now. Whereas with this shorter time frame trading, this is just something I'm starting to do more and more recently because it's so simple, because it's so easy to do. I'm starting to do it more and more recently. And yeah, that's really, there's no secret to it. It is time consuming. You have to be at your screen. You have to be active as a trader. So it's not really a passive income sort of thing. But it is easy. So when you have time to do it, it really pays to do it because it's so simple. Like this is another one. This is a gaming crypto I'm in. It's a very, very, I think this is a very, very good, personally, do your own research. But personally, I think this is an extremely good investment, this crypto, because this is setting itself up to be a gaming publisher like Ubisoft, like EA, a gaming publisher in the crypto world. They already have several games under their belt. It's called PYR, Vulcan Forged Pyre. But this one is, again, really, really simple to trade because this is the $20 level. It's now above $20 and it just constantly reacts to this round number. Yes, it dipped below it, of course. Like I say, things can dip below. You can't win every single trade, just like in Forex. But you can see how reactive it is to this $20 level just because it's a rounded number. It's at $20. Once it's above $20, it just keeps reacting to that $20 level. Also, $18 is a pretty strong resistance on this one. And it keeps reacting from the $18 level. Once it breaks below 20, it tends to bounce from the $18. It's only newly above there, though. So this is all obviously subject to change. But yeah, this is another like crazy good investment, this one. You can see, do you want to guess when Mark Zuckerberg mentioned that he's changing Facebook's name to Meta?
Yeah, probably the first candle in November. Yeah, that one.
Mark Zuckerberg announced he's changing the company to Meta, and boom, it shot up. And that's another thing about crypto that you have to be aware of. It's just like, I like to say, you have to dumb everything down. As the dumber you are, the better you are at crypto. Because the thought process here for me was, Mark Zuckerberg said the word Meta. I'm buying metaverse cryptos. That's the thought process. Mark Zuckerberg says Meta, I buy Meta. That, like, it's a 1-2 thing. So I went heavily into metaverse cryptos like this one, like Naka, which is another gaming distribution platform, which I think this one was moving up a little bit before Mark Zuckerberg said it, but then it went boom, and it's come back down now, which is fine because I cashed out a fair bit of my profit up the top here, so I totally don't mind that dip. Block, this is the one that I'm up like 700 times on. So Mark Zuckerberg announces Meta around about here, boom, shoots up, reacts, and drops back. People take profit and it drops back down. Easy to see coming. Illuvium is another gaming crypto. This one is not a metaverse crypto, so it didn't really react to Mark Zuckerberg. This one's just been on a steady rise ever since it came out. I mean, people bought this one. I didn't get into this one all the way at the bottom, but some people bought this one at like $1 or something like that, $2. I don't know where it started at really, but really cheap. And now it's worth like $1,200. So it would have been nice to catch that one early, but unfortunately I didn't. Yeah, there's just so much opportunity in crypto. You can do like the long-term investing where you'll buy a new crypto, a new gaming crypto you believe in, and it'll do like 100 times return. Or you can play the levels on the daily chart, like I was like with Naka or like with Pyre. You can play the levels on the daily chart, or you can invest based on the fundamentals when an important person like Elon Musk or Mark Zuckerberg says something, you can buy. or you can, I can't remember if I've already said the 15-minute scalping, you could do that. There's so much opportunity in this market. You're spoiled for choice, really.
Yeah, and it's pretty much always active too. Like you can trade in a 1 minute chart, it's going to be a lot more active than Forex sometimes.
Oh yeah, it's way more active. It's way more active, and it's 24/7, which again is like one of those blessing and a curse things, because the biggest downside I have right now on crypto is it's taken up a lot of my time, and it does get quite stressful. Knowing that you never have the market's never offline, it's a bit stressful, right? Because on Forex we get a weekend break. We don't have to think about our positions on the weekend. I could wake up Saturday morning and Bitcoin could be down 20%. So that part of it, me and my friends, we have, where is it? I don't know where it is right now, but we've actually bought these like really, really cheap mobile phones. I haven't set mine up yet, but these like £30 mobile phones that we just keep on our bedside table. And only 4 people in the world have that phone number, and it's me and my group of trading friends. Actually, 5 people, because now we got an American dude who's watching the American markets for us. Only 5 people in the world have this phone number. That phone is there that in case the market is absolutely crashing, I have a phone that's always on. And they can call me and they can say, the market's crashing. And then I have to be there and react. So that's obviously stressful. My stress level has gone up since crypto. And I've had a life of like almost no stress, working only a few hours per week. Now I'm working like 8 hours per day on crypto and my stress has gone up. So there are downsides to the market. It's not all upsides. Not having a weekend break kind of sucks. I have to be honest, because there's no time where your mind can just shut off and be like, the market's not moving. The market's always moving.
Yeah, I did feel that too. Also, it's funny because the weekend is definitely slower and like moving sometimes less, but it could happen that things move faster on the weekend.
Yeah, some weekends. I think 3 weeks ago, Bitcoin made an all-time high on its weekend. So yeah, that's totally possible in crypto. You can get an all-time high on a Sunday, and then if you're not around for that all-time high, then you've potentially missed out on making some massive profits, because when something all-time highs, I usually short it. It just makes sense to me to short it, which would have been a good short opportunity there on Bitcoin. But that I'm pretty sure this happened on a Sunday. So if that happens on a Sunday, you might not be around because you want your weekend off. So you can never take a weekend off. It depends how active you want to be, though. You don't have to do it like I'm doing it.
Do you have any favorite brokers or platform for cryptos, or?
Yeah, actually, there is. There's first of all, Binance. Look, I don't like Binance that much. They're not a great company, but they have most cryptos, and they have like some pretty good trading interface and stuff like that. So Binance, KuCoin, KU Coin. KuCoin is another crypto exchange that I use a lot. KuCoin is the one where you can buy cryptos like Naka, like Paya, and those are the cryptos that are making crazy gains right now. The gaming cryptos, and a lot of the gaming cryptos are exclusive to KuCoin right now. They'll probably eventually be on Binance, but right now they're usually going to be exclusive to KuCoin. So you have to be signed up to multiple exchanges in order to trade crypto effectively. Binance and KuCoin are just the start. There's also X markets, but you can also trade the more traditional style, the Forex style, through a broker. And the broker I've started trading with recently is 8cap.
Yeah, 8cap is pretty good. That's the one I'm using too. Yeah,
they're pretty awesome. because they approached me to do a trading battle with Boris. I'm totally blanking on his last name. Boris.
Boris Schlossberg, yeah.
Yeah, I don't know why. Like I know the guy. I should have remembered his last name. It just was not in my head right then. Yeah, so I did a trading battle with him, and I got to know the 8cap guys, and they're really nice people. So I've started using 8cap, and also they're integrating with TradingView, which is awesome.
Yeah, pretty soon. I think they're not live yet, but by the time this interview goes live, they should be. So that's gonna be good. I'm definitely gonna be on it for sure myself.
Yeah, that's always been the dream for me. Trade through TradingView, but none of my brokers ever supported it. But now 8cap does, so that's really exciting. I'm really looking forward to that. Yeah, so 8cap for trading crypto is good because with Binance, you can technically short with Binance, but depending on the country you're in, you're not allowed to. Like, I can't really do my proper style of trading through Binance. I'm mostly using Binance to buy cryptos and hold them. Whereas with 8cap, you can buy, you can sell, you can do the more traditional style of trading. That's what I'm using them for.
Interesting. Definitely a lot of you covered here and a lot of advice to people. So they have cryptos to follow. They have strategies they can use. They have the broker they can use as well. So I'll try to leave the links below for that as well in the description and the podcast show note. Where can people find you? They'll connect with you or reach out after the interview, Nick.
We have a free Discord group, and basically in crypto, I'm thinking that I want to keep everything free. I've had a Forex website for a long time. I used to sell a course. I really feel like I want to move towards the free route, just have free content. Number one, because I really don't have the time for paid content right now. And number two, I just want to get as much people involved in crypto as possible, because a lot of people are scared to approach it. They think it's too intimidating. They think it's high risk. So I don't want to have like any barriers in the way of people trying it out with money they can afford to lose, seeing how it goes. I don't want to have any barriers in their way. So I've launched a free website called Luna Crypto. Luna is spelled LUNR crypto.com. And there's a free Discord group there. A Discord is, for those who don't know, it's just a chat room. There's a link to the Discord group. Join the chat room. Me and my team, we share whatever trades we're taking in that room. And yeah, we've shared some, like, basically, and this is all like in the chat history. So it's easy to see. We shared NACA when it was down here. We shared Paya when it was, I think, down here somewhere. So for free, we're sharing stuff that does like 150% gains. NACA was absurd. NACA did trying to see under my light, 400% gain. ILV, I think we shared months ago, actually, when it was like $500 back here, which is now topped out at like $1,300 yesterday or the day before. So yeah, we're sharing all those kinds of trades with people for free. I know it sounds crazy because when someone says for free, they're like, what's the catch? But I just kind of want to build a community around crypto. And the returns I've made in crypto lately have been so crazy that I don't really feel like I need a second stream of income. Also, I stake my cryptos, which brings in like stupid interest rates. So that's my second source of income right now. That's another thing you should get into, staking cryptos. Sorry, yeah. I know we have
Which platform are you using for that, by the way?
You can stake. Usually you stake on there's multiple options, and it differs from crypto to crypto. So a lot of times you have to stake on the website of the crypto, but it's totally secure. They can't just take your crypto. If you read up on how it all works, you understand why they can't take your crypto. It's all a smart contract type thing. So staking usually on the website, but you can also just stake direct from your wallet if you have Atom wallet or Exodus wallet. For Cardano, ADA, you stake from your Cardano wallet. There's just so many different examples of where you do it, but a lot of the times it's going to be on the website of the crypto itself. And staking the crypto, it facilitates transactions on the network. You're helping verify transactions, and you get a piece of the transaction fee. So, some respectable cryptos are giving like 15, 20% per year. There's even one that gives you 90% returns per year. Some less trustworthy cryptos, are doing like 8,000% per year, but that's a risk, 8,000% per year. I know it sounds crazy, but it's true. I've got some money in those cryptos and they are doing those returns. But yeah, they're less trustworthy. They could go down at some point. They could crash. So that's a bit of a high risk play. But you put $1,000 in there, it can go up 8,000% in a year. So why not? And there's some that even do 80,000% or 100,000%. It won't stay at 100,000% per year. It'll start there and then it'll go down, and it usually settles at like 5,000%. But 5,000% APY, your bank gives you 0.05%. Some cryptos give you 5,000%. But like I say, those are high risk stuff. It could easily be that crypto crashes and you lose like 90% of what you put in there. So I wouldn't advise that for everyone. If you have spare money floating about that you're happy to risk, chuck it in that crypto, get 8,000% per year for as long as it lasts.
Interesting. Well, definitely a lot of things you're doing, a lot of free content you provide people, which is really good. I definitely admire that for sure. I'll leave links below the description. People check it out for sure. They can see what you're doing and connect with you for sure there. And good talking to you, Nick. It was good to hear what you're doing. Good to see the progression you've made also with different markets and things. Really fascinating stuff. And I'll talk to you pretty soon.